Good morning. Welcome back to the Daily Grind. I'm your host, Chum Change. This is live recorded and it's Saturday morning. 2 days until Christmas. If anybody celebrates Christmas here, happy holidays, Merry Christmas. Let's see who is in the chat. Today we're going to be talking about Bitcoin transactions and the SEC having secret meetings apparently. Mr. Austin over at Altcoin Daily actually dropped a video, so I want to watch that. I haven't had a chance to do so yet. Mr. Big Black, what's up, buddy? Good to see you. Andrew Masad, Steven Cicero, good morning. My man Luke is here. Good to see you. Good to see you. Steven, let's see. Hold on. Steven Lung. I don't know if that's how you say your name. I apologize. I totally butchered that. Let's see. 100 Air. Good to see you. Good morning. TGIG. What's up, man? Dumpster Fire. Good to see you. Chris Hanley. Best Spartans forever. Appreciate you guys. All right. Crypto Bedell. Anybody else I may have missed, I apologize. But just before we get into this, today's video is sponsored by Dynex. I don't know if you guys saw this sick new trailer. I'm going to play it real quick just for you guys, but go check out their marketplace if you guys are interested. This thing's pretty awesome. Check it out.
You know quantum computers. You know blockchain. But do you know both together? Dynex was the first platform to create a neuromorphic supercomputing blockchain-based algorithm which solves real-world problems. And the best part, anyone can post a job, whether a company from the Global 2000, a machine learning job, or fintech and pharmaceutical. And if you don't want to program it yourself, get an expert directly at the marketplace. Run the job and be impressed by the fast result.
How sick is that? Was there actually an echo? I apologize if there was an echo. That's my bad. I got to figure that out. I actually inputted into Streamlabs, so it's kind of a little different. Anyways, let's get into the market, see what we're looking like today. Shout out to Dynex for having an awesome platform. It's pretty sweet. All right, let's see. We have Bitcoin 43,884. Look at that, up 0.45%. We have Ethereum. Looks like it dropped down 0.5% or so. It's still at 2,300 bucks. Crypto Frank, good to see you, buddy. Good to see you. Let's see. Sounded like he was recording it in the bathroom. Oh, really? Yeah, it probably had double audio. My bad. I'll figure that out. Actually, I'll do it after the stream. I gotta get situated for later tonight. Let's see. All right. Real quick. Solana, 96 bucks. Holy hell. Look at that. We have Kaspa's down to 10 cents. It looks like. Shiba's pumping a little bit. 4.19%. We have, let's see, AVAX $45, 2% up on the day. BNB's up 0.5%. Not too bad. Dogecoin still holding 9 cents, but it's down 0.5% just about. Check out Crypto Bubbles over here, dude. I love these little hats and presents. It's so funny. We have ELF on the day. ELF. A-ELF. I don't know if that's how you say that. I have no idea. Ranked 89. It's $1.01 as of right now, and it looks like it's pumping 28% on the day. We have Stacks STX up 13% today, ranking number 39. We have Immutable X. Looks like 11.3% today to 249. Let's see what else we got here. SEI looks like it's at 35 cents, ranking 82. We have Render up 3.9%, ranking 48 at $4.55. Man, I really wish I kept my bag of that. Let's see. unMineable can't tag cleaning up the office. Oh, good morning, Geek of All Trades. Good to see you, buddy. I love that. I love that little soundbite there. It's perfect. Good morning, Mr. Max Voltage as well. We have OP Optimism ranking number 32, up to $3.21. Pancake Swap looks like 8.7% up on the day, $2.71. Not too bad. All right, let's share the Fear and Greed Index. Looking like a 70. Not too bad. Still pretty neutral to me. Like I said, over 75 is really where we care about, at least in my opinion. All right, top 10 coins by coin market cap over on CoinGecko. Bitcoin, Ethereum, Tether, BNB, Solana, XRP, USDC, Cardano, Lido Staked Ether, and Avalanche. Dogecoin still in 11th. Avalanche still got them beat by $3.2 billion or so. Crazy. And people are saying that Solana might they might push up, man. They might push up, but I don't know. It might flip BNB soon. It really might. It's look at it. It's both $41 billion market caps. 41.5 is BNB and 41, basically 0.1 is Solana. So they're only really what 5 or 400 million away. That's not. I mean, grand scheme of things, it's not too much. That's crazy. They have been climbing the charts. If you guys have any questions, obviously just add me in the chat. Let's see. We have Shiba is in 18th place. I like to check out where these coins are at. Litecoin's in 19th. We have Bitcoin Cash in 22nd. And Uniswap is in 21st, by the way. Uniswap, I'm not sure. How do you guys feel about this token? I've been hearing some pretty decent things about it lately. And I don't know. I'm on the fence if I want to get in on it. I don't know. I don't know if it's worth it. I gotta check out the charts and stuff, but whatever. Let me know what you guys think about it. We have Monero's in 31st. Ethereum Classics in 32nd. Kaspa is now in 40th. Still at a $2.3 billion market cap. Again, the price is at 10 cents. It's not bad. It's really not bad. It is still floating sideways, at least in my opinion. All right, let's get over to the mining segment of things and see what we're looking like over here first. And mine the ASIC. This is where we check out how much these miners are making us every day. WinMiner K9. God, look at that. $104.19. You know why?
This hash rate's going bonkers.
Max Voltage knows why. Just wondering if you did. We have the KS3 8 terahash unit at $79 a day. Man, this is rough. Like, I don't even want to look at it right now. I'm just gonna cry. I'm gonna go in the corner and cry. Sad. Very sad. I'm just kidding. I'm just giving Max I'm stroking Max a little bit so he shows up tonight. We have the KS3M at $57 a day. We have the KS2 making $18.89. We have the KS1 down here making $9.44. And let's see, where is it? Where are we at? Where's the KS0 Pro? Here it is, all the way down here, all the way at the bottom, Max. You see that? Oh, 200 gigahashes, $1.94 a day. Again, this all reflects on price. Yes, hash rate has, you know, its effects too, obviously, but the price isn't high, right? If the price goes back to 15 cents, you're going to be looking at another dollar on this unit, right? So whatever is what it is. Well, we'll get there someday. But I do want to support the Kaspa network because Bitcoin transaction fees are complete ass. I'm not sure if you guys even know that, but actually, you know what? Let me just show you guys real quick. I went to send the winner from the other day when I gave away 50 bucks in Bitcoin away, $25 to 2 people. That's what I did. All right. I felt it was a better way to do it like that. I went to send it last night and look at this. Look at this right here. All right. Or is this yesterday? Actually, yesterday morning, I think. 25 bucks. The first person sent me their address. So I was like, all right, I put it in. Look at the network fee, $26.98. I was like, absolutely not. I emailed the guy back and I was like, hey, I'm like, would you take USDT or Kaspa? I'm like, cuz this is just absolutely absurd. I'm not going to pay double the price to send you this Bitcoin. That's so stupid. And the biggest thing that bothers me about that is now having a big bag, right, of Bitcoin itself in general. That sucks when you got to take it out. Like, how bad are you going to get whacked? Like, say you had 1 Bitcoin and you wanted to send it out. Like, how much are you going to get smacked in a fee for that? Like, I really hope that gets situated because that is freaking awful, at least in my opinion. Anyways, yeah, I don't know. Bitcoin transaction fees is just ass. Let me know if you guys have noticed that in the chat. Let's see. You get an LTC. Yeah, or LTC. LTC's even cheap too. If you could see my face right now, Max, you know, he's balls deep in a bowl of Raisin Bran. Oh, I'm sorry, Max. You make me laugh. I love you, buddy. Absolutely love you. All right, let's see. We have the Jasminer X16P at 5.8 gigahashes. Looks like what is this? Oh yeah, that coin. Man, what is that called again? CAU. I gotta look it up. Hold on. We're gonna check out some other coins too before we get into the new stuff. CAU. What is this? Canixum again? This one? All right, so what was the other coin? Bitnet was up yesterday on this unit, right? And the X16, and now this Canixum is up, I guess, on it. Let's see, the Jasminer X16Q. Yeah, this one's back, $8.71. Interesting. Excuse me. Gosh. All right, let's see what else. What are the miners you guys got? Who's got what? Let me know. CCXD, use Litecoin next time. Every wallet supports it. Yeah, that's true too. You know what? Well, honestly, like, I don't care if the winners are watching, whoever won that Bitcoin, if you guys would like it in any other means, like, I'll send it to anything else that is not $25 to send it. All right. All right, the Jasminer X4Q looks like it is still mining XPB. Oh, this is that Power Blocks actually, isn't it? XPB. That's making $4.47 a day. XPB. Isn't that Power Blocks? Yeah, this is Power Blocks. And I know that because of Mr. Geek of All Trades did 30 coins in 30 days, and I absolutely love how he slowly dies during the 30 days on those shorts. I don't know if you guys have seen them, but they're friggin' hysterical. 45 cents. Let's look at ETC pile real quick. See how this is doing over here. Down 11.2%, 90 cents it looks like. ETC pile. Red Panda killed this project. All right, let's look at Hivemapper. Actually, I could have just typed in honey, and that would have worked too. No, I was just kidding, Panda. All right, we have 18 cents on Hivemapper. It's down, but overall, this is we needed to pull back. That shit was off the chain. Mr. DJ Mines in the house. Appreciate you, buddy. Thanks for being here. Let's see. How's the new wait, shitcoin NetSys? I don't even know what the hell is that. NetSys? Never heard of it. 47 cents. What is it? Let's go to max. When did it come out? So like 5 days ago? Not even. What's today? 3 days ago? On Wednesday? 3 days ago? What is it? What is it? I'm gonna have to look into this. Where can you even sell it? XEgg. Dude, why is everything on XEgg? Is that even how you say that? I don't even know. But everything is on this platform. Makes me even more sketched out about it. Like more so than Trade Ogre, right? Even though Trade Ogre has some hiccups, I don't know. This one's got like everything. I don't even know where are they based out of? Does anybody know? Let's see. It's an X11 algo, I think, says Bot Life Gamer. Interesting. Nexus is an FPGA coin. Gotcha. You mean to say NetSys? Not Nexus? WX2? Let's see. I finally hit my payout. It was like 70. Was that like 70 cents? I got you, Charles. Got you on ETC Powers that you're talking about. Let's check out Dynex. Let's see how Dynex is doing today real quick, and then we're gonna check out Flux. 75 cents, down 4.1%. Could be worse. Honestly, I think Dynex is a really good buy right now. That's just my opinion. Flux, again, regardless of being a sponsor of the channel, has nothing to do with it. I do think it has a good chance to run up again. We have Flux at 59 cents, which is also, in my opinion, a really decent price to purchase at. Just my opinion. All right, look at this Pyron coin, still on the top of the charts for the 4090. We have this AIPG. This is a new I think it's a Kapow algorithm, if I'm not mistaken. The AIPG coin, this is off the table for me. Not mining it. I would purchase it. I would not mine it though. That's just my opinion. Again, Kapow, I can't do it at my electric rate. If I had a cheaper electric rate, maybe things would be different. You know what I mean? But AIPG seems to be on the top of the charts for a lot of these coins. Pyron though has been holding pretty well. It actually has been holding well, and I honestly do think it's because unMineable did not list Pyron hash. Because if you guys noticed, let's see, let's check out the price of Pyron real quick. Pyron is at 7 cents. Let's see, Carlson. Oh, why? Of course it would land on Jesus coin. Oh, I typed in KLS, hit enter too fast, and it went to Jesus coin. We have Carlson at almost 5 cents. This thing just auto converting over to like on unMineable with Carlson hash is really just completely tanked this project. Where's that guy that donates to DJ stream? He needs to donate now because I showed it by accident. Every stream the guy donates to look at Jesus coin every single day. Anyways, all right, let's get into this news, man. We need to see what's going on here. I cannot see that. Somebody tipped something. I can't tell what it is. I appreciate the tip though. Thank you so much. Appreciate you, whoever that was. I don't know. I honestly can't see. It's way too small on my screen. All right, let's see. We have 2024 is going to feel like a lot of tailwinds coming together. So we're going to hear from Miss Kathy Wood. We have Anthony Scaramucci and Anthony Pompliano actually are on Fox, CNBC and Fox Business this morning. So let's listen to this one first, and then we'll get into the rest of the stream. Let's do it. At me if you guys have any questions.
So pretty much everyone got it wrong, except for that guy. Fundstrat's Tom Lee.
Oh, sorry, this isn't Kathy Wood. This is the Tom Strat guy.
AKA the Oracle of Optimism, AKA the guy who got it right, AKA Tom Lee, not the drummer. He predicted the S&P 500 would end the year at 4,750. That means that if the S&P, folks, falls just a tiny 5 points next week, we got 4 days of trading left in the year, Tom could literally be exactly right. Wouldn't that be something? So let's bring in Tom, who, you know, you can smile. It's kind of the Tom Lee version of a smile, but, you know, you got it really right. And the basic question is how? What did you see that all these really nice, by the way, but really highly paid and really wrong strategists at the big houses got it wrong?
Is it me or is his right eye twitching?
Hi, Brian. Thanks for that intro.
That's from stress, by the way.
I think there were two things that we were different from the street. The first is we didn't think inflation would take a decade to defeat. I think many were bracing for 10 years of Fed fighting inflation.
Max in the chat, even a blind squirrel finds a nut once in a while. Jeez. Tough crowd.
So stocks would get stuck. And the second was because of the inverted yield curve, many were predicting a hard landing in 2023. Our view was that inflation was going to fall like a rock this year, and the Fed therefore could take its foot off the fight, and that economic resilience and the fact that companies were bracing for this storm of hikes actually could avoid a recession. And so I think that kept us optimistic, and that stocks would look like 1982 and rebound to all-time highs very quickly, which it looks like it's happened.
So again, not to be little, but why did you think that inflation was going to drop? Because if that is the basis of your thesis, others also got that wrong. What did you see in the data that made you think, when things were just cooking inflation-wise at the beginning of the year, that they would slow down?
Go, you're horrible. You're a horrible person. He said, okay, that's not what I thought his voice was going to sound like. Is it just me?
Well, Brian, it's a little... What our team did was we rejiggered inflation and identified that 86% of all this rise in core inflation was coming from housing and cars, including the fact that super core was rising. Almost all that was auto insurance, auto repair, auto leasing. So we realized that this was all just following goods pricing, that car prices were set to fall, and that would pull down inflation. It looks like that's kicking in now, and that housing just needed to get towards a 3 to 4% annualized rate, and that would get you back to where you need to be to get to 2% core inflation. So our view is it's not about travel and it's not about health insurance. It's really about cars and housing getting back to normal, and that's the trajectory we've been seeing. I think the market's recognizing that view, but we spent most of the last 18 months arguing that view.
What are you looking at for next year, Tom?
I think it's going to feel like a lot of tailwinds coming together, because we know the Fed is going to be supportive, managing the business cycle instead of fighting inflation. And we've identified reasons for capital spending to pick up next year, including that huge gap between soft and hard data. And that should lead to EPS surprise. And then mortgage rates, we think, could drop towards low 5s, maybe even 4s next year. And that would be stimulative to the consumer. So
mortgage rates are insane right now.
To me, it feels like it could be an early cycle year that really benefits financials and small caps.
But you don't see the S&P 500 gaining another 20%, do you?
It's possible, but that's not our base case. You know, we think it's going to gain at least 10% towards 5,200, but it probably means you first consolidate a lot of this parabolic rise in the first half. You know, so maybe we fall to 4,300, but then we rally pretty hard into 5,200 by year end.
But so it's either stress because his eyes twitching like that, or he's a robot.
I think that small caps could outperform the large caps next year. Did I hear you right?
That's right. Yeah, I think small caps might even just rise every month next year, because on a price to book basis, they're back to 1999 levels relative to the S&P, and that was a launch point where small caps outperformed for 12 consecutive years. So I think we're entering a period where small caps and market breadth are going to expand, and that's going to be good for stock pickers because they can buy companies they like, and you're going to have a decent earnings backdrop as well. Yeah,
there's a lot of companies out there, and we're not allowed to own individual companies. I can own index funds and ETFs and mutual funds. That's pretty much about it. But when I look at some of these screeners that I'll do just on because I'm bored and I'm boring, I'm like, man, there's a lot of seemingly really good growth companies that are trading at like 4 times earnings in small caps.
DJ, he's not old. He's not an old guy. He just has a twitch in his eye. Dude, I had that happen to me. That's why I'm saying I know what it is. It's definitely stress. That's what happens. Your eye will fucking twitch. When I had my plumbing business, dude, I swear to God, my eye twitched for like 2 weeks. It was terrible.
That's
completely
right.
Just left on the trash heap.
That's right. I mean, the money's been equities have been starved of inflows. You know, retail investors pulled money out of stocks this year. And in fact, the S&P ex-FANG is trading at 15 times forward earnings. I mean, that itself is a pretty reasonable multiple. But then when you look at the S&P 600, which is the small cap index, you know, you're at 12 times. So you're absolutely right. Small caps are pretty attractive.
All right, shout out to Mr. Tom Lee. All right, let's get over here. I think, yeah, this is with Kathy Wood right here. The economy will be in a period of deflation next year, says ARC's Kathy Wood. Let's see what she has to say. Guys, that like button, please. Appreciate you all.
And of course, the question remaining, what does all of this mean for equities? Well, my next guest has been saying all along inflation is transitory. The big problem now is deflation. That's the basis of her strategy for investing in 2024. She's also been making news with her X Spaces chat yesterday with Tesla CEO Elon Musk on a wide range of issues from passive investing to the future of AI. Joining me now with an exclusive interview on the exchange is Kathy Wood, CEO, Chief Investment Officer of ARK Invest. Kathy, happy holidays, Merry Christmas. Good to see you. And it's especially merry, it seems, for ARK because you're up 46% since Halloween. Right? And more than 70% year to date after a couple of rough years. So what shifts do you make here?
Well, what we've been doing during the tough years when interest rates were going up and shocking the system, especially long duration assets, we concentrated towards our highest conviction names. Now that we have had a very nice move in the market and interest rates and inflation seem to be under control, we do believe we're going to see deflation next year, and that the Fed will have to cut pretty aggressively. But we do think we're on the other side of the horror show we went through. And we think that companies that are comfortable with deflation as technologically enabled companies focused on innovation are going to do very well in the next few years.
Well, that doesn't sound any different from what you usually think. So are you going riskier?
Yeah, well,
look at that. Coinbase is up 394%. That's crazy. Tesla's up 108. What is this? UiPath? I don't even know what that is. Roku, Zoom, Block, Roblox, man. Geez. I really wish Neoxa was able to get Roblox put through. Man, that would have been crazy.
Well, many people would say what we do in the downturn, concentrating towards our highest conviction names, is a risky strategy. It usually works out very well for us. We have a scoring system that really helps us along. Now we're diversifying more.
Okay.
And we should we expect the IPO window to open up again. There are a lot of companies out there starved for capital, have been waiting for their liquidity event. So it's a good time to diversify and also to add back in some of the names we sold as we were concentrating, perhaps because of more clarity in their own outlooks.
But that sounds like, and correct me where I'm wrong here, it sounds like you're saying if you're diversifying beyond your highest conviction names, then you're going into names that seemed riskier for you for whatever reason. So why were these types of names lower conviction in the past? Are they smaller caps in the public market? Do they have a more uncertain path to profitability? Are they perhaps in second or third position in the markets they're trying to capture?
Well, some might surprise you. One of the ones we've added back is Meta Platforms. It's not a big position. We've been taking profits out of some of our stocks and reallocating back to Meta. Why? Well, when we sold it, we were not crazy about the metaverse strategy and how much capital Meta was allocating to that particular strategy. When Mark Zuckerberg pivoted effectively into his AI strategy, we think they're in a brilliant position from an AI point of view, and they're really pushing the envelope on open source AI. Which should help them in their own business.
Yeah, that's going to be terrifying, though. AI is going to be absolutely insane. All right, let's continue on this. Bitcoin will eventually surpass its all-time high, says Skybridge Anthony Scaramucci. Guys, that like button, appreciate you.
Could the approval of a Bitcoin ETF, if we get it, ever, turbocharge Bitcoin and other crypto, maybe like Solana, in the new year? Let's bring in Anthony Scaramucci on this, the founder of Skybridge Capital, noted crypto investor as well. How shocked, if I had to have, with everything else that has gone on with crypto, okay, with all the problems this Bankman-Fried character, a bunch of other things. And someone said, but Bitcoin's going to go up 160%. I would have said, what is in your eggnog? Because I want some.
Hold on. D. Geppetto just said, oh my God, I just got interrupted with the scam XRP airdrop ad. Guys, make sure you report those ads. I can't control the ads that YouTube puts out, but absolutely make sure you report those ads if you see that scam bullshit going on.
Yeah, listen, I mean, it's very hard to understand why it went up that rapidly for the persons that are not studying Bitcoin. But if you step back and look at the 14 years of Bitcoin, or now almost 15, it is easier to understand for those people. And I've been in Bitcoin since 2020. And so, yes, I see why that happened. And probably, since you mentioned Sam and some of the other nefarious actors, they probably pushed it down too far at the end of last year, Brian.
Yeah, because I do also want to remind our viewers that may not be crypto investors or follow it every day, Bitcoin was at 60,000. So we've had a hell of a run this year. It's been great, but we're still well off our highs. Do you think next year, or if we ever get a Bitcoin ETF, that high can be breached?
So I've been embarrassed by my predictions in the past. I thought it would have gotten to 100,000 by the end of 2022. If you recall, in November of 2021, we got the Bitcoin futures ETF, Brian. And so I thought that that was going to come. I filed, Skybridge filed, not me, but the firm filed for a cash Bitcoin ETF. It was rejected alongside of Fidelity and many other players. We'd elected not to do that now because of the competition. So a lot of this stuff got dragged out because of the regulation. But if you're asking the question, will Bitcoin get through its all-time high? I believe it will. I don't know when. There could be some selling pressure, sort of that whole buy on the rumor, sell on the news in the beginning part of the quarter. But if you're asking by year end, hopefully you'll invite me back. I think we'll be through the all-time high. But I've been embarrassed by my predictions before, so I'm a little hesitant now, a little gun-shy, a little humbled.
Well, listen, you and everybody else. I mean, you heard the top of the show probably that, Anthony, that pretty much every big name on Wall Street whiffed on the year for stocks. Do you just invest in Bitcoin? Because we're seeing a lot of enthusiasm.
That's such a good analogy. It's so funny.
Around, still, again, altcoins are back. We talked about Solana. It's up 400%. You've got Ethereum. You got some of these other coins that are really getting hot. Makes me a little nervous, right? Because
look at Solana, crazy, $96. It's been on a tear. Look at 396.35% in 3 months. That's crazy.
Momentum, probably a lot of retail money here. Do you invest in any of these altcoins?
Yeah, well, I'm still doing, when we met back in 2009, I'm still doing the same thing. We have a broad hedge fund of funds portfolio that's up about 25% this year. Our Bitcoin exposure obviously up 160. We have a ETF called CRYPT, CRPT, which is up over 200%. So about a third of our business is in cryptocurrency. But you mentioned some of the names that we own. We do have exposure to things like Solana, Ethereum. We own something called Vulcan Forge, which is a very small video gaming company. But Algorand.
Vulcan Forge? Anybody hear that?
And is another name that we own a lot of. And so we do have some of the what we would call the altcoins, but the big kahuna in the room is Bitcoin. I have something called Kaspa Laboratories. I mean, those are just some of the names that we have. But I think you're asking a broader point. Do we invest outside of Bitcoin into other Web3 tokens? And the answer is yes, but the preponderance of our money is in Bitcoin. We got there in 2020, so we're one of the first institutions to get there. But we're still institutionalists, so we sort of stuck with the quality of Ethereum and Bitcoin, Bitcoin being number one.
Shout out to Anthony Scaramucci. All right, let's see who else we got. We have Mr. Anthony Pomp, Bitcoin ETF, biggest marketing blitz in history. Let's get into it. Guys, stop being lazy. Hit that damn like button, will you? God. Perfect. I hate asking, but I really have to. YouTube sucks if you don't. Oh, geez, that was a lot of shit.
Here's something, folks. My next guest says that Americans had to become market speculators because this is what happens as the U.S. dollar continues to lose value. Joining me now, Pomp Investments investor Anthony Pompliano. Anthony, you included a chart in this as well to sort of illustrate, some of the things that are happening here. We have the U.S. listed companies This is another factor, right? Going from over 8,000 to just a little bit more than 4,000. The whole thing seems to be conspired to funnel us, make us funnel our money into these markets. Otherwise, I mean, how do you keep up with anything?
I don't know if it's a conspiracy. I don't know if people are that smart, but definitely what's happened is there's a structural issue in America. If you look at the debt, I mean, just in the early 2000s, we were still running a surplus in this country. Now we're running multi-trillion-dollar debts. The total national debt's over $33 trillion. And so if you have this overhang of debt, you've got to go and you've got to devalue the currency. So as they've done that, we've seen this income inequality drastically explode. And so now you have 50% of Americans that are winning who are holding stocks, 50% of Americans that are not holding stocks are losing. And so what we've seen is since about late 1980s and 1990 till today, we went from 30% of US households that held stocks to almost 60%. So we've doubled in the last 30 something years. And so what that tells you is that people are waking up. They're realizing if I simply hold savings, it is going to get devalued away. I have to go into the market. And so doubling from 30% to 60% of US households now hold US stocks. And so all that tells you is that people are getting smarter, television, internet, et cetera, educating them. And I think that it's only going to continue.
So here's the thing that I do find interesting, though, with that whole notion, like, you have this much debt because Japan was ahead of us, right? And I remember when everyone thought Japan was going to be the number one economy in the world, that was back in the day. They were buying everything up, and all of a sudden they've imploded, and they've never really been able to get back their footing. It seems like, okay, maybe this is a good deal for investors, but for the nation, it feels like we can't go back. No one has the willpower in Congress to go back to say, I'm going to cut spending. So it feels like the nation's fate could be sort of sealed. I don't know what would replace us. Maybe that's the only thing saving us right now.
Well, we control the global reserve currency. So that's a huge, benefit and kind of tailwind for us. Right. But I don't see us balancing a budget anytime soon. I don't see us paying back the debt anytime soon. And so definitely.
Real quick, Mr. Crypto Frank, damn, with the 20 gifted memberships, dude. Thank you so much. And Merry Christmas to you. And Green Hash. Dude, same thing. 5 gifted memberships. Wow. Thank you so much, guys. I really appreciate it. Perfect. You guys are awesome.
Looks like America's future is going to be based on taking on more and more debt. Now, what that means is, as an individual, whether you like it or not, you can't change that, right? There's no one individual who's going to be able to change politics or Congress or any of that stuff. So what you have to start thinking about is, with your portfolio, what are you going to do? Right. And what we've seen is that, again, inflation and debt equals returns in stocks, bonds, commodities, Bitcoin, cryptocurrencies, et cetera. And so I think you're going to have an entire generation of people who are growing up in a more financialized world, and they're going to plow all of this capital into financial markets.
Speaking of which, you say that we're right now on the cusp of the biggest marketing blitz in financial market history. And a lot of that's revolving around Bitcoin.
Think about $50 billion or so coming into these ETFs that are going to get approved at some point here in the future. If you look at the fee schedule, that's somewhere between $500 million and $1 billion of annual revenue that's up for grabs. And it's not just for 1 year. That's every single year for perpetuity. Right. How much would you spend if I said that there was $500 million that was up for grabs? 100 million, 200 million, 300 million? I don't know what the answer is, but we're about to find out what these firms are going to do.
I'm digging the one with the most interesting man in the world.
Bitwise.
That's a good one.
Yeah, that's a great one.
It's going to be hard.
That is a great one. Mr. Dan R., shout out to you, man, for the 1 gifted membership. Thank you so much. Appreciate you, buddy.
Well, I think that's a really good one.
Listen, when you put BlackRock, Fidelity, Bitwise, and many other of these issuers together, not only are you going to have a lot of money spent, you're going to have a lot of creativity come into the market. And so what we're really going to watch here is, in some way, Wall Street is about to go and market Bitcoin and cryptocurrencies to the nation. And that's only going to lead to more capital.
I got less than a minute to go, maybe 30 seconds, but I was always a little leery. I know on one hand, obviously, these names, they control everything, right? They are the titans of the world. But on the other hand, I always feel like when they get involved, something goes wrong for the average investor out there. Maybe Bitcoin doesn't get derailed, but are you comfortable now with these big names coming into this space?
I think it's just inevitable. If you want mass adoption, you're going to have to get these large organizations to go ahead and adopt it. And as that occurs, you just have to remember there's a trade-off. And so, yes, there will be some blunting of some of the other aspects of Bitcoin or cryptocurrencies. And we can't change it. So just be prepared, get educated, and make sure that you understand what the market structure is going to be over the next coming years.
I love your attitude. Listen, you can't change it, so make the most of it. In this case, make some money.
Shout out to Mr. Anthony Pompliano. All right, you guys are awesome. Thank you so much again for all the gifted memberships. You guys didn't have to do that. But Merry Christmas to all of you guys. And I think that has opened up the doors for, let's give away another tangent today. You guys haven't seen a whole bunch of tangents to start giving stuff away, and I've been giving them away all week during the live streams, but we'll give another one away in a few minutes. All right, let's check out CNBC Crypto World over here. Solana near $100 as the crypto token extends its rally. Let's get into this, guys. hit that like button, at me in the chat if you have any questions. Let's do it.
Today, Solana's rally continues as the cryptocurrency nears $100. And we explore the pros and cons of investing in a crypto-focused stock like Coinbase compared to the crypto tokens themselves.
Mr. Alexander, damn, with the $100 super chat. Thank you so much, man. Merry Christmas. Thank you for all you do. Dude, you're awesome. Thank you so much. I appreciate that. You're great. Appreciate you, buddy. You're the best.
Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices mixed to end the week. As of noon Eastern, Bitcoin traded pretty flat at $43,500. Ether climbed more than 3.5%, trading above the $2,300 mark. And Solana's rally continued today, with its token rising more than 5%. For the week, Bitcoin and Ether both climbed more than 3%. Both cryptocurrencies are on track for their fourth positive week in the last 5. Meantime, on Wall Street, the S&P gained a little less than 1%.
Alexander, thank you so much again.
All right, let's jump right into our main story. If you're thinking of investing in cryptocurrencies, you have a choice. You could dive right into the $1.5 trillion crypto market directly by buying Bitcoin or Ether, for example. But there's another way to get exposure. You can invest in a publicly traded crypto-focused business. For some, investing in a stock is familiar territory. For others exploring the nascent industry, there could be added benefits of investing in the token itself. So I spoke with industry experts to find out the risks and rewards for each strategy. Both crypto tokens and related stocks are staging a comeback in 2023 after the worst of the crypto winter. As of December 20th, Bitcoin has more than doubled so far this year, rising around 160%. Ether climbed more than 80% in the same time, on pace for its best year since 2021. Meanwhile, crypto companies have rallied too. MicroStrategy has more than quadrupled this year, and crypto miners Riot and Marathon Digital have soared 385% and 546% respectively.
There's kind of the narrative, which is buy Bitcoin and chill, right? Just let the best performing asset of all time compound over a long period of time. It's a finite asset. More capital is going to flow in. The price will go up given enough time. On the other hand, there's people who say, look, I don't want just kind of the beta exposure to the market, right? I want to be able to have some sort of outperformance. And so they'll use leverage, they'll buy equities, they'll do all sorts of different things. But if you take more risk, you better get a higher return.
Absolutely. Shout out to Mr. Anthony Pomp. Mr. Andrew Masad, thank you so much for the $10 super chat. He said, can't compete with the huge PP energy, but Merry Christmas just the same. Dude, you're awesome. The amount doesn't matter. I appreciate anything. You guys are fantastic. Thank you so much.
2023's performance is just one part of the
awesome,
picture,
buddy.
And overall, not every company or cryptocurrency is doing quite so well. Take Coinbase. It's one of the biggest crypto players traded on Wall Street, and it's up more than 350% this year. But over the last couple of years, the company's stock has struggled.
We have an underperform rating on Coinbase. One of the reasons is the legal and regulatory environment is pretty unsettled. Right now, the SEC initiated a lawsuit against Coinbase back in early June, and the outcome of that remains to be seen. We also think that it's going to be challenging for Coinbase to diversify its sources of revenue beyond its core business, which is largely tied to retail trading.
Since Coinbase went public in April 2021, shares have plunged more than 35% as of December 20th. In that same time frame, Bitcoin tumbled 27%, while Ether actually rose more than 2%.
These companies,
I personally think Ethereum's going to be on a tear this time around for some reason.
Companies are a proxy. They are going to move directionally the same as Bitcoin, but not precisely the same. And while they fell a lot more over the last 2 years, they also grew more in the good years. The reason the prices fell so much is because they had risen much higher in the first place. So you're getting the best in both. You know, you can't have it both ways. You can't get both higher return and lower risk. Those are on a seesaw. You're going to get a lot of one, you're going to get a lot of the other.
And of course, for most investors, the big question is, which strategy is going to make the most money with the least risk? In 2024, both the assets and crypto-focused companies face big catalysts and major headwinds that could influence investor returns. Bitcoin is the dominant cryptocurrency. That's likely to
It is, but their transaction fees are ass right now, and that's going to be the downfall of Bitcoin, at least in my opinion.
Continue in 2024. And there's a major event coming in the year ahead that could drive prices. The halving. The key technical event takes place every 4 years and reduces rewards for successfully
That's funny. Someone bought a fake Bitcoin and just grind it in half.
mining new Bitcoin by half. The goal? To reduce the supply of Bitcoin over time. Before the last halving in 2020, the price of Bitcoin increased by 19% from the same day a year earlier.
When you look at these market cycles, historically, they've been kind of 4-year market cycles in between these Bitcoin halvings. And so usually what will end up happening is you'll get about 2.5 to 3 years from the bottom of the last bear market to the top of the next bull market. And then you'll get about a year, year and a half market correction. And so historically, there's been hundreds of percent up, and then you get about an 80% drawdown.
Bitcoin isn't the only one likely to benefit from the halving either. In a recent report, Bernstein says it expects Bitcoin miners in particular to outperform the broader market going forward, thanks in large part to the halving event. Bernstein argues the cut to mining rewards will likely drive consolidation among miners.
Man, I wish this was my facility. That's so sick. Mr. Sustainable Crypto, real quick, with the 6 months membership. He said, thanks to Pocket Change for supporting Chump and giving us this channel. Happy holidays. Dude, you're awesome. Thanks for being a member. Appreciate you,
Lower
buddy.
payouts mean the more efficient firms will make more money.
What we're seeing when it comes to Bitcoin miners is in 2023, they have been the better asset to have allocated to. Now, the question becomes, will that remain over a long period of time?
Miners aren't the only crypto companies facing stiffer competition. Coinbase, Robinhood, and similar firms felt the pressure in 2023 as crypto trading volume plummeted and transaction revenue dried up. In 2024,
And isn't it crazy how we see that kind of drawdown every, during the 4-year cycles? Every time it goes bull run to bear run, like everybody just like offloads shit, just sells out, and then everything starts to pick back up again and just booms right around the halving. Mr. DJ Death Star, appreciate you, buddy, for the $5 super chat. He said, you mentioned Render. Did you buy it or did you lend your GPU power to the network? He said, I am looking into it now. See how to do it. Merry Christmas. So I actually did look into doing the GPU power to Render, but you have to like apply for it, and they have like a form you got to fill out and send it in. So I don't know if you got to be like a big guy to like get into that, but I never filled it out. It was a bit too much for me to get into it, or get involved rather, but just let me know if it works out for you. I did purchase some over on Coinbase a while ago though, and I ended up selling out about, I don't even know, probably before it was, I think it was around $2 or so when I sold out.
or crypto businesses will have to prove their staying power.
In my view, there's very little scenario where the businesses themselves succeed, but the tokens themselves fail. If Bitcoin and ETH disappeared from the world tomorrow, is that business going to be successful? I would argue probably not. Could, but unlikely. Versus there's a high chance that the business doesn't succeed, competition, someone else replaces them, margins compressed, but the tokens themselves are fine. The business goes away, Bitcoin and ETH are still around in 2025 or 2030.
One major challenge still lies ahead for both crypto assets and crypto companies alike: regulation.
In the United States, I think that Coinbase and other companies like it have understandably expressed some frustration with the lack of regulatory clarity that we've seen coming out of the U.S. government. Which agency is going to be responsible? What are the rules going to be?
The industry has pushed for clearer rules, but none have made it past the early stages in Congress so far. And regulators like the SEC are still cracking down on crypto with enforcement action. That's unlikely to slow in 2024.
I think we are going to continue to see active investigation and pursuit of crypto companies that are operating outside of the guidelines. I think in some cases, like for Kraken, it was very hard for them to know how to register and what the guidelines are. And we've seen even Coinbase have a similar issue in the past, and they put more effort towards regulatory compliance probably than anyone. I mean, I think that the more companies that are forced to come into compliance, the better. And, I think most companies are going to do everything they can to comply. And I think that the SEC and the lawmakers and the CFTC can all make this a lot easier by being very, very clear on what those rules are.
Now, there's also the potential for an all-new crypto investment strategy coming in 2024 in the form of spot Bitcoin and Ether ETFs. If approved, spot crypto ETFs would let Wall Street players buy into digital assets through a regulated exchange. That could drive up the price of Bitcoin and Ether. Major crypto companies could benefit too, as they help the ETFs operate.
If they are approved, Coinbase is expected to have a custodial role with at least some of those ETFs. which in and of itself would be a positive. It would mean some incremental revenue for them. However, ETFs could certainly represent a form of competition because an individual investor in particular might say, well, I could just buy an ETF through my existing broker and own Bitcoin that way rather than having to open an account at Coinbase to actually buy and sell Bitcoin.
Coinbase, that's a good point. Like, people are gonna see, like, people want the easy way out, especially people that have a lot of money. It's just they can't be bothered with trying to self-custody their Bitcoin. So that's why the Bitcoin ETF is such a big deal. But at the same time, it's going to bite all of us in the ass because the transaction fees are going to go through the freaking roof. And I just had to address something in the chat. Charles Harrison says, why is Panda sick every video for 2 years? It's so true.
Has an important role to play here. We've been named as the custodian in many of these ETF applications. And our view is that it's going to be really good. It's going to bring in new sources of capital into the crypto ecosystem. That's going to be good for crypto, but it's also going to be good for Coinbase.
Speaking with CNBC in September, Coinbase CEO Brian Armstrong also addressed the potential for more competition for Coinbase if those spot crypto ETFs get approved.
We haven't seen any margin compression yet, and our general view is that we want to grow the size of the pie. So we want crypto to be integrated into every traditional financial service firm. We want it to be integrated into every fintech out there. We want it to be integrated into new types of wallets, Web3 that's just coming on the scene. So I don't view it as competitive. Coinbase has really incredible infrastructure that we're going to be able to power a lot of these things to have a piece of the pie. But the most important—
God, he does look like Hitman.
important thing is we got to grow the size of the pie.
That's funny.
So with so much news driving the crypto industry in 2024, what's the game plan for investors? Well, some experts say it might be less about one investment over another and more about investing across a wide range of assets.
What a lot of people choose is diversification. In other words, instead of trying to make a bet as to which approach is better, do a little bit of everything. This way, you are protecting yourself by not making a single bad bet. You'll be directionally correct. Own a little bit of Bitcoin, a little bit of the Bitcoin ETF, a little bit of these crypto stocks. If you're doing it in that fashion, no one thing will hurt you, and you'll be directionally doing well along with the rest of crypto.
Okay, that's all for Crypto World this week.
I'm gonna be honest, Crypto World had a bomb-ass video today. Shout out to CNBC Crypto World. And real quick, yeah, DJ Mine says it's because his kids go to daycare, and it's so true. But Panda also eats some nasty-ass bullshit. You guys see that freaking duck he ate? That was the grossest Twitter post I think I've ever seen in my life. All right, let's get into Mr. Altcoin Daily, Austin over at Altcoin Daily. BlackRock Bitcoin ETF news. I haven't seen this video yet, so guys, that like button, appreciate you all. If you want to stop it in the middle, just let me know. But at me in the chat if you guys have any questions. Let's do it.
As the Bitcoin price pushes higher, we're getting troubling news out of BlackRock, the SEC, the almost dozen spot Bitcoin ETFs, and the series of closed-door meetings that the SEC is holding with all spot Bitcoin ETF applicants. And these meetings are happening almost daily. As of 2 days ago, being reported by Fox Business, the SEC is having as what's described as a rare joint conference call with prospective spot BTC ETF filers.
I mean, that's good news though. That really is good news. Even though it's kind of sketchy, they're doing shit in the background. It's at least they're being proactive towards the, approval. They have to get some things in line for it to be able to be approved. So that's good news.
Double scoop. Sources that were there on the call tell me it was to do with making sure everyone is doing cash creates. The SEC asked issuers to remove all hints of in-kind redemptions from their filings, which of course is the latest update today. We see all these creation types switching from in-kind to either cash or in-kind or cash. Cash is now an option. And to understand what that means, could you dumb it down for a simple little moon Lambo like me? It means that the issuers, like BlackRock, have to convert their Bitcoin to cash before trading shares of the ETF. In other words, they can't use Bitcoin to purchase or redeem the shares. The SEC does not currently allow BDs to trade in Bitcoin. So they're saying—
Wait, what? That's kind of weird.
Now, or current rules now, do not allow shares in the fund to be bought with Bitcoin, only cash. And specifically—
Wait, what? That's crazy. I mean, I get it. It makes sense, kind of, but like, what?
Who does
That's
this
kinda
affect?
weird.
First off, I'm gonna like the video. I appreciate the latest information. But while Bitwise was the first to bend the knee and switch their creation type to cash, right? Bitwise is the most interesting man in the world campaign. But then BlackRock, ARK Invest, and Galaxy Digital's Invesco quickly followed. They are now pure cash creation, and then everybody else switched to now in-kind or cash. And why would they do this? Why would BlackRock, let's say, why would BlackRock want to make that switch? Well, everyone is surprised that BlackRock is adjusting their S1 rapidly and aggressively in response to the SEC's feedback. But
because they want to be first on the freaking approval, obviously.
Let me remind you of BlackRock's track record. They have 576 ETF applications and all but one approval. That's a 99.8% approval rating, demonstrating that BlackRock understands that if you want approval from the SEC, you play ball, and the ones switching to cash
you got to stroke them a little.
Approval.
That's
and
what's happening.
I want to be very clear with you on what this cash redemption model means. And is this still bullish? Because the huge benefit of all these Bitcoin spot ETFs was that they actually have to hold the Bitcoin. A cash creation model is one where the authorized participant deposits cash in the ETF equivalent to the net asset value of the creation units to be created, meaning that the fund then uses this cash that's deposited to purchase the underlying assets such as Bitcoin. So the Bitcoin...
But does that mean they have to buy a Bitcoin in the background? I assume? I don't... That's kind of weird
So
to me.
it's bought, you just have to use cash to get it. But for...
I mean, but how... Well, you have to deposit cash to get Bitcoin anyways. Like normally. Like what? I'm kind of confused. Anybody else confused or is it just me?
Kind creations, the participant deposits a basket of securities matching the composition and weighting of the ETF's portfolio, allowing the fund to issue creation units to the investor without immediately selling the securities for cash. And issuers...
Max, get out. Go on. Get out. We'll wait. We'll wait until you leave.
Like BlackRock, like ARK Invest, typically prefer in-kind creations because they're more seamless. This model, in-kind creations, is seen as more efficient for ETFs, as it avoids bid/ask spreads and broker commissions from selling the basket to raise cash for issuing shares. However, cash creation provides more flexibility for fund participants. So people buying into the ETF, you may prefer this. Cash is often easier. So BlackRock, Bitwise, all of these companies will still have to hold the Bitcoin. I don't know who needs to hear this, but cash creation does not mean the fund won't hold spot Bitcoin, or that a Bitcoin ETF will be a fractional reserve product. Even in cash...
So it's honestly not going to affect much.
Create/redeem, the funds will hold spot Bitcoin. Absolutely. The difference is that the fund issuers need to buy the Bitcoin, not the APs. That will likely create more performance variance among issuers, where those with access to the best trading tech and liquidity will have better performing funds. That's probably good for BlackRock. And so many of you were asking me about Blast. Ethereum L2 protocol Blast sets new TVL record above 900 million. They don't even have a token live yet. The mainnet is coming eventually. Now, this is not sponsored at all. It is an L2 though, with native yield, which is one of their secret sauces. And L2s are a trend this cycle. And I'm
honestly shocked it's not sponsored. He said it wasn't sponsored, so
always keep you updated on the trends.
That's kind of interesting.
Also, they do have some of the people that were
He doesn't talk about anything he's not paid to talk about, I don't think, anyways.
Behind Blur, which essentially almost destroyed OpenSea, how popular Blur became. Some of them are now building Blast. But the question is Blast a Ponzi?
Blast. Is it a Ponzi? Let's take a look. So it's the most hyped...
Has anybody heard of Blast before we get into this real quick? Has anybody heard of it? Because I have no idea, to be honest. I have no idea.
L2 in the market right now with over 150k on Twitter and over $500 million in TVL. Holy shit.
I like this 90-second breakdown, the good and the bad, from Cameron the NFT.
So why should we care about this? And is there something more sinister at play? It's the first ETH L2 to offer native yield for both ETH and stablecoins. The yield on Blast is derived from ETH staking and RWA protocols, and an interest rate of 4% for ETH and 5% for stablecoins. But I want to look at this from a different perspective. Blur ended Season 2 and announced Season 3 alongside Blast. Pac-Man, the founder of Blur, is also...
Oh, Pac-Man. This is the, that coin you could triple mine, right? With Octaspace and Pac-Man. I made a video on this.
Building Blast. Blur was in a sticky situation. It had some pretty bad market sentiment. Blur needed a way out. They couldn't just keep giving out token because that's a sure ride to dump city. So Pac-Man hatches a plan. The perfect plan. A way to steady the coin, to keep the incentive cycle rolling, and to keep people competing for those tasty, tasty Blur points. And on top of that, to keep major investors happy, more on that later. And it has to make sense to Blur in the context of the product offering. So what does he do? He identifies an issue in the space, devises a plan to solve that issue, integrates it in with Blur. He keeps Blur users happy and grows Blast at the same damn time. But this product is not built yet. There's no testnet, transactions, bridge, or roll up, and there's no way to get your money back if you send it there unless a 3 out of 5 person multi-sig deploys a new contract with the function of withdraw and then sends the funds across to that contract. Jeez, $500 million locked up for at least 3 months. And I guarantee, hold me to this, there will be a marketing scheme to keep people staking past the 3 months, I promise you. But let's just waddle back for a moment to keeping investors happy. This decision has not made investors happy, as you can see from this tweet from a member of Paradigm. The TLDR is that while they back Pac-Man 100%, they do not agree with what they've done and feel it sets a poor precedent for others to do the same. And I wholeheartedly agree. This is not healthy. It locks up an enormous amount of liquidity for an extended period of time, and it sets a precedent that companies can come in and do the exact same thing without having any kind of product built just because the marketing is perfect. Fair play. This is a weird place to be in for the team because they have an immense amount of pressure to build the perfect product. They cannot screw up here because there is so much on the line, not only for Blast, but for Blur. So what's my point here? My point is Pac-Man and friends have created an almost perfect plan that covers almost every single base. From the marketing to the narrative to the token, everything seems like it's falling into place. The chips are on the table, big time. People are waiting. And now the easy part, all he has to do is execute.
So this could fail, this could succeed. I think it's gonna get hyped up either way. Click subscribe, I'll keep you
I'm personally gonna stay away from it. That's just me. You guys do what you want, but I don't know. Weird.
We also have
just seems a little sketch to me.
Still doing well. People are asking why. Solana surge continues, now flipping Binance's BNB in market cap. If you're asking why, it's because of the memes. Meme Coin Mania helps push Solana DeFi volume over Ethereum for the first time. We also have AI coins doing very well. AIT, one I'm an early investor in. The world's first AI data infrastructure.
Anybody heard of this? AIT protocol?
Providing Web3 AI solutions and creating millions of jobs with the train to earn model. So they had a very successful launch. And by the way, always be careful. Just understand that volatility, especially on day one, week one, expect volatility. But it's just cool to see them progressing and partners, actual users signing on to use the tech. As tweeted by Volumint, congrats to the AIT team with a successful launch. In the age of AI and decentralization, Volumint and AIT will join forces to stay
I wonder if this one's a shill.
Forefront of AI
Not sure.
by sharing data and knowledge. This partnership paves the way for collaboration on multiple levels and also utilizes our data annotation platform for various purposes, including data analytics benefiting both communities.
I thought he was saying the partnership between him and that company, but he was not. He was just talking about the partnership in general. He was reading the actual article. All right, Mr. Old War Tech, let me address this real quick. He says in the chat, there's no such thing as triple mining. And you're correct. But for normal people, not nerds like you, all right, it seems, you know, it's just easier to be said that way. I know it's dual mining with the reward of a third coin, right, for dual mining, but that's just how it is. You don't have to get all upset about it. Jeez. Go back to working on cars, all right? Killing me. I saw your other channel. I know you work on cars on the side. All right, let's see. Let's see. Black Cat, what's up, buddy? Good to see you. Thanks for being here. All right, we're going to be rating Crypto Mikkel, and I actually do have to give away one of these. But what I'm going to do is, so I usually just tell VIPs in the chat to go comment on my new videos, right? And I tell them what to do for a hashtag in the videos. So I'm going to drop a video in, I don't know, it's going to take some time. I got to record it and I got to edit it and get it out. So probably like a couple hours. So just stay tuned for the next video. Put a positive comment and hashtag Tangem in that video. And you guys, obviously, it's going to be the newest video on my channel. It's going to be about unMineable and Dynex. You guys will see it soon. So just make sure you guys comment on that video, something positive, and hashtag Tangem. I'm going to let my members know as well, and I will give away a Tangem wallet later on today. So it's the easiest way to do it. I just want to raid Crypto Mikkel. I don't want to take up too much more of his time. But anyways, guys, the market's looking great. Everything is honestly fantastic. Bitcoin's almost $44,000. We have Ethereum at 2,300 just about, basically. Everything's looking good. Can't really complain. You guys are all awesome. Thank you so much for all the super chats. You guys are unbelievably supportive, and it means the world to me. And also, yeah, have a Merry Christmas if I don't see you guys, but we'll be back later on tonight or Misfit Mining Saturday Night Live. Hopefully Max Voltage will be there. Appreciate you guys. Catch you soon, and peace out.
Perfect.
This hash rate's going bonkers.